Automobile major Mahindra and Mahindra is all set to hand in its Q3 report card, and it's likely to be a healthy set this time around. Why that is? Because the agri segment, tractor segment has continued to witness very strong buoyancy in demand. They've logged in very strong volumes continuously ever since lockdown sort of got lifted, and it has sustained even in Q3 of FY21 as well, which is likely to reflect quite strongly and quite positively on the numbers this time around. Automobile business has also seen a slow and steady uptick, I would say, and that will also add to the financial performance. Let's understand how the poll is looking like for M&M and MVML combined. We're looking at a revenue of 13,880 crores versus 12,120 crores, up 14.5% year on year. Profits seen at a little over 1400 crores. 1410 crore is exactly what our estimate is pointing to versus 981 crores, up almost 44% on a YOY basis. EBITDA is seen at 2,215 crores versus 1,789 crore. A healthy 24% uptick is seen on the EBITDA front as well. Margins likely to see a healthy 120 basis points expansion on a YOY basis. 16% versus 14.8% is what we're penciling in. Let's understand what essentially happened in the quarter gone by and why we expect to start with a revenue growth of 14 to 15%. It's primarily driven by a 3% rise in volumes, 12% uptick in realizations, which are likely to sort of aid the overall sales figure. Despite higher input costs, we're expecting a healthy expansion in margins, like I flagged off, 16% versus 14.8%, primarily because of better mix and cost reduction efforts. In fact, the company has been talking about tighter cost allocation for the last 2 quarters now, and we are likely to see benefits of that. However, on QOQ basis, margins are likely to be under pressure because in Q2 they came in at 17.8%. So it's almost a 180 basis points negative impact on the margins if you look at it sequentially, mainly because of high commodity costs and weaker product mix, because in this quarter compared to Q2, tractor mix was down about 500 basis points on a QOQ basis. Profits are likely to be robust owing to higher EBITDA and other income. Why the other income component is likely to grow is, or rather grow substantially, is because of receipt of special dividend from Tech Mahindra. So here are a few triggers, a few factors which could aid the performance or impact the performance as far as Mahindra's Q3 is concerned. Lots of monitorables as well to watch out for, starting with the growth guidance for FY22. Both auto and tractor segments is something we will be watching out for as far as growth guidance is concerned. Margins outlook, another important thing to watch out for. Update on new launches, and finally, what is the further update on the exit of JV with Ford, and further clarity on SsangYong stake sale, which the market still awaits. So these will be essentially the key factors and the key monitorables for Mahindra and Mahindra's Q3. Let's see how the numbers play out. At least by looking at the poll, it is definitely going to be a healthy set.